Ah,
Oh, there we go.
I
Hi,
think we're
hi
live.
everyone. Hi everyone. Welcome to Touch Gold, a discussion of gold and silver on chain and the future of tokenized assets. I'm Jeff Powell from Strato. I'm here to talk about two topics near and dear to my heart: RWAs in general and tokenized metals in particular. Really, we're going to talk about just the explosion of RWAs. Right now, the RWA market is estimated to be $35 billion. Gold has recently been leading that charge, not just the price of gold in general, having tripled in the last year, but also really exploded in terms of value in the RWA space. But of course, there's other commodities to talk about, treasuries, private credit, real estate, everything's going on chain. And so tonight we're going to talk about, or today, excuse me, we're going to talk about that and also very specifically drill into hard metals. Very, very happy to be here with Kieran James Lubin, co-founder of Strato and longtime technologist, really Ethereum OG, and somebody who's actually been involved in RWAs for a long time, having participated in some of the first RWA tokenization projects for big companies. So hello, Kieran.
Hey, Jeff.
And
Thanks for having me.
also have Adam Buktila from RWA.io. Adam is also a longtime technologist. He's been in RWAs for a long time, co-founder of Defactor, as well as, of course, co-founder of RWA.io. So hello, Adam.
Hello, Jeff. Hey, everybody. Great to be here.
Okay, so Adam, since this is your first time on one of our spaces, gonna start with you. Lob you a question to get going. And I mean, I guess it's just that since, because of what you do, Adam, I mean, you really see the RWA landscape, every day, whatever the categories are. I mean, I know it really breaks down right now into sort of, four major categories people talk about. Yield bearing cash, led by tokenized treasuries, commodities, private credit, hard assets. So I know that you see all of those right now, but what do what is your feeling about RWAs in general, the space, what's going on with it, and maybe a little more specifically about tokenized metals?
Yeah, sure. So I'll start with just a little bit of a brief intro on myself. So,
Please
firstly,
do.
it's great. Firstly, it's great to be here. I'm based in Ireland, although I'm currently in north of Spain, very beautiful Galicia. I got involved in tokenization coming on about 8, 9 years ago now. So we started in the kind of security token space. We started to run infrastructure for lots of different projects, and we really saw the kind of evolution of digital assets kind of into the RWA space that it is today. So you mentioned I'm co-founder at Defactor. So we really focus on the infrastructure, the tooling. We basically built a framework of smart contracts where you can bring pretty much any asset on chain, if that's a project token or utility token, or indeed an asset-backed token or an RWA. We've built it purposely in a way that it doesn't matter if it's metals, it doesn't matter if it's a tokenized money market fund, piece of real estate. We can bring the assets on chain, but I think we all know now that's the first part of the journey, right? That's now not the difficult part. We can share screen now and tokenize assets in a couple of minutes. It's what comes next. And this is really where RWA came in, RWA.io. We are basically the hub for the entire industry. We track everything from tokenized commodities. We've got lots of precious metals on there, which we will be getting into. Currently sitting at about 450 projects that we're actively tracking, and this is all over the globe. So you're seeing pretty much everything from what really started as a lot of these kind of just stable coins, yield-bearing stable coins. We've now saw last year a lot of equities get brought on chain by people like Ondo and others. Kraken now, for example, working with the back team to bring tokenized equities to their exchange. So I think the level of product has been maturing, and absolutely the amount of assets that have been brought on chain has exploded. So the supply side is there. We know that. But we do still need to get a lot more mature on that buy side, right? We need to inform investors about what's there, the possibility, allow them to conduct the right due diligence. And I think now with the explosion of AI and people getting a lot more comfortable interacting with their agents, we can really start to bring that intersection of tokenization and AI to the forefront. And that's something we're really excited about. Going back to metals specifically, I said it to you guys before the call, I'm a gold bug. Gold and silver, I'm a real big fan of. I can absolutely see the value in having, at least a small percentage of your portfolio in metals. But tokenized gold in particular excites me because of the transportability, the fractionalization, the ability for you to use it as collateral is huge. I come from a mixed heritage of European, North African, and both of my ancestors have all held gold, and even to this day in North Africa, it's still one of the main sources of store of value because they just simply don't trust their currencies. So that's a long answer. Hopefully, I didn't take up too much time, but I'm excited to be here, and I think you can probably tell that I'm excited about metals.
Well, that's great because I think you'd be. I think you wouldn't be having as much fun if you weren't excited about metals on this call. But Kieran, I mean, obviously we're talking a lot about tokenized metals, but at Strato, we kind of eventually came to tokenized metals. It's not where we started out with RWAs, but we were always very interested in this digital twin concept, right? The concept of a real asset, that's backing up the token. So maybe you could give us a little background on sort of the journey at Strato, how we learned about RWAs and how we ultimately moved into metals in a big way.
I'll try to give the medium length version. So first, we built one of the original Ethereum mainnet clients, the Haskell flavor, and pretty early on did some things that kind of almost accidentally attracted a lot of enterprise interest, changing certain things about the API style, also just allowing permission network setup, which of course later was added to most of the other Ethereum clients. But very quickly, we got interest from big banks. We partnered early with Microsoft to create the blockchain as a service category on the Azure marketplace. And so we got a lot of interest from a certain kind of more corporate user early on, a little bit by accident, but we ran in that direction for quite some time. This led into doing a project with BHP Billiton, which was, I believe, simultaneously something of the first RWA. In particular, it wasn't like a stable coin, and the first NFT project. So we helped them track core samples through their supply chain. And that led to like a whole lot of supply chain continued work in mining and in the energy industry as the years went on. But, it was, to our knowledge, NFTs before NFTs had a name. And we always kind of kept that spirit. And I would say the company always had the goal to connect the real world and blockchain technology. Observing even before the launch of Ethereum, tremendous interest amongst technologists, also interest from business people, but never the two, rarely the two connecting. And still we have this problem. Still very jargon heavy industry that is not quite as accessible to newcomers as it could be. So in any case, following that supply chain RWA thread, we eventually set this back up in more of a permissionless network context. So opening it all to everybody. First creating sort of like an open sea for RWAs, right? So we tokenized something of everything: works of art, physical, carbon offsets, collectible shoes, whiskey barrels, which all these things are still on our chain, but traded less than they were then, and precious metals being one of them. So in this time, we definitely found demand for the assets being sort of investment grade. People preferred those to consumables of any sort of stripe. And we actually started to see that people wanted to borrow in addition to. So while one of the magic pieces of blockchain technologies, you can kind of spin up liquid trading markets from nothing, if you will, and sometimes make assets that weren't liquid, especially with things like fractionalization. I really think credit is the big use case. This is why DeFi is going to win. If you have something getting sort of no questions asked purchasing power while still being able to keep that thing is really, really compelling. And we're not explaining well enough that you can do this. So we did a big replatform, having observed a lot of demand to borrow against metals, notably seeing seven-figure borrows rotating into crypto, seven-figure profits following that, and just kind of trying to scale that pattern up so that the average user can kind of hold hard assets that they want, get purchasing power, rotate if they want, loop into yield, etc. So we've gone very much, we're calling it hard fi, but really, RWAs plus DeFi mixed seamlessly together.
Yeah, that's really interesting, and I do want to talk more about credit, but something that you touched on, and also Adam that you touched on was, Adam, I think that the way you described it was, thing about RWAs is, where that it's become mature, and actually I was thinking about the fact that it wasn't that long ago when there was a question of when is the institutional adoption coming, and man, it came fast and hard, right? BlackRock, JP Morgan. Just in a big way. But you had referred to, we need maturity on the buy side. And I think that that's really interesting, that there's this concept that from an institutional standpoint, there's these, huge financial organizations are all in, but the man on the street can still be skeptical about that. So maybe you could each, offer a take on that.
Yeah, well, firstly, I think there's a couple of reasons for that. I think retail, especially the crypto enthusiasts, have been burned many times. We don't need to talk over some of the hardships. I'm sure you guys are aware and have the scars to prove it. But I think trust is the big thing, right? The Bitcoiners say you don't trust, you verify. And I think there is still going to be a journey for people, especially retail, to trust these assets are what people say they are, the custody is correct, the jurisdictions, the licensing, everything in place. But in reality, the man on the street doesn't care about that. He wants a good product. He wants something that works. If it's a yield-bearing asset, he wants to know that he can get it, right? So I think you're right. The institutions have showed up, and they've showed up in a big way. But the problem that I see is that there's still not enough differentiation between the products that are on-chain and the products that are off-chain, right? So if you're a big hedge fund or you're a big family office, you can get low double-digit yields off-chain, right? Why are you taking on smart contract risk and taking on additional risk in order to access an on-chain product, right? So if it's purely the battle of the yields, so to speak, then is that a compelling enough case? I think it's when you actually layer in the functionality such as lending and borrowing, liquid staking, looping, farming, all of these kind of DeFi concepts, but this starts to become really hard to ignore, right? And what we're seeing, as I say, we're now tracking, if I just check the numbers, so I'm correct, $360 billion worth of assets on the platform. 54 billion of that are asset tokens. And I would hazard a guess that almost every single one of those projects would love more customers. They'd love more buyers. They'd love more exposure. Yep. That's what I say. We need to reach that level of maturity. And I think the likes of the neobanks, the Revoluts of the world, the Robin Hoods, all of these guys coming to the party, offering commodities, offering crypto, those things may start to intersect slowly but surely. And that's when you'll start to see some true adoption. But it's been a very interesting journey. I think people expected to see like an NFT style boom where everybody was buying their pet rocks and their crazy trading cards and everything, but RWAs, they didn't have that sexiness element, right? I can buy a piece of Michael Jackson's jacket and it was framed in that way back then. But actually, when you then start to think about hard fi, as you guys are calling it, and the tokenized real assets, you can start to make these really compelling stories. So it is still storytelling. It is still, knowledge building. People need to be informed. And that's very much why we're here. I think we've got a chart on our homepage, and it's basically like, one of those maps. We are here, right? And we are. I think there's a couple of thousand maybe projects that are bringing assets on chain. We think by 2030, there's going to be easily 50,000 different businesses either tokenizing their own assets or on behalf of others. So there's definitely going to be a flood. How do we get the buyers, both institutional and retail, to take notice of this? And my answer to that is better product. It has to stand out.
Interesting. Kieran, what about what about Strato lives up to that? What is about Strato that stands out? And if I am someone, who's really like, okay, how do I get yield on my token, on your platform? What are the answers to that?
I wanted to call back to a point and then work back to your question, Jeff. I think we saw a precursor for what's happening with RWAs with stablecoins. Started kind of low and slow, right?
Interesting.
No one crypto native per se really wants stablecoins. I can say that I don't even really love stablecoins, right? Like we wanted remittances to be done with Bitcoin or then ETH or what have you. Why put the dollar back in this thing that was meant to maybe supplant or replace the dollar? And the answer is because you have to, right? Like the people, crypto remains too volatile to rely on as your sole, bank account, if you will, right? Like just your expenses are probably denominated in US dollars or local currency that's inflating even more than US dollars, say. And so it is, we saw maybe 2024, 2025, we started to see stablecoin market caps decouple from crypto market caps for the first time. And that's an enduring use case. We're going to see the same with RWAs. Stablecoins do not solve inflation. They don't give you exposure to interesting, in some ways, right? Some of the best assets are TradFi assets. It's unfortunate, right? But people want that Tesla stock. People want the S&P 500, et cetera. And, if you try to get a margin loan from a normal brokerage on your Tesla stock, it's like 18%, 16, maybe not if you have a really large balance and a wealth manager and so on. Combining the power of DeFi with the high quality, somewhat boring legacy assets is going to be the big unlock. And so we actually do this now, right? So we have a mix of eligible assets on our system. So gold and silver being kind of the headline, and some of the only ones we tokenize first party, right? So those are actually our tokens. We will even still take, PAXG, XAUT, and so on. And it's really about making those assets productive. So the way we do that, we have a CDP acronym, but basically a decentralized stablecoin infrastructure where you take the assets in, you mint the stablecoin against them. So they're locked for the time where you have that stablecoin outstanding. It's in effect borrowed. There's an interest rate. And then you can go deploy that stablecoin anywhere within our native pools. So you say you got gold and you want some dollar denominated yield. You can go swap into any number of yield coins, SUSDS, Syrup USDC, and so on. Maybe you want yield in ETH and you want more of it. So you could deposit a liquid staking token, mint our stablecoin, and go acquire more of that liquid staking token, introducing some risk, but juicing the effective amount of yield that you're getting. So it's really about connecting the quality collateral that we do see in my happiest scenario is just like everything would be on chain. There's a bridge scenario we're in now where there's tremendous demand from crypto natives and to use good high quality legacy collateral on chain. And there's a time delay where you have to get it there somehow. And also not all of it perfectly connects with DeFi infrastructure just yet. So some of the tokens have stronger transfer restrictions than others, so for the experts in the audience, a lot of the way you make DeFi lending work is that you allow for liquidations, which are basically margin calls. So if the value of the collateral falls too much against what you've borrowed against it, there's a possibility that someone will cover the shortfall. You'll lose your collateral and they'll make a profit along the way. You can't do that if the asset can't be transferred. So some of the RWA, or it's difficult, right? Some of the RWA assets have a whitelist where only certain parties can even take possession of the asset at all. So, we're in a funny intermediate phase where we've got all of the, some people are choosing to re-implement the TradFi gates. Some are more like USDC, USDT, where there's the Trad KYC if you mint and burn, but it's transferable otherwise. There's a whole mix of different points in the design space we're seeing. And I actually expect things to look more like USDC, USDT over time, where you may have a gate on entry and exit, but within the secondary market, you have pretty free transferability, basically because that's what makes everything work.
Okay, that's really interesting. You've given a lot of information there, and I like to tell stories and maybe keep things a little simpler for maybe somebody who's not familiar with it. But before this call, when we were talking, like Adam and I were talking about how we both like physical metals, like we both own some of it. And so say I'm somebody who's not on Strato, and I actually own 55 ounces of silver that I have hidden in my house, but it's increased in value over what I bought. I mean, silver today is at $75 an ounce, so I have 55 ounces, so it's worth like $4,100, and I probably paid $1,200 for it. But it's just sitting there, right? It's just sitting in a safe in my house. If somebody breaks in and steals the safe, I've discovered that my homeowner's insurance won't cover all of it. So if I wanted to do something with that, but I like it, I don't necessarily want to sell it. What can Strato do for me? What can Strato do for me with the value of that asset?
Yeah. I'll try to keep it, boil down to brass tacks. So you can take some or all of it. Maybe you want to keep some just for, the bug out bag. And maybe you want to deposit some. So basically you can mail to our approved vaults. There's an offline intake process. Some amount of silver. The person at the vault will then check how many ounces it is, do a quick assay, and they'll get back to you and mint that quantity. So if you send in 20 ounces, you get 20 silver tokens, right? Once you have that, that gives you, in effect, liquidity power on the system. So we'll allow up to 75% LTVs. We don't necessarily recommend you go that high. And so let's say it's $1,000 worth. This means you can borrow $750 against that, and then immediately redeploy it elsewhere. Maybe you want more silver. You can loop it back. Maybe you want treasury style yields. You can go buy one of the treasury proxy coins, and there'll still be a spread whereby you're just getting net new purchasing power sort of from nothing. Also, if you wanted to sell that silver, as we saw in the crazy run up when silver went over 100 and so on, it was actually very difficult to get out of silver at that time. You could call the retail bullion brokers. They'd take a week to get back to you. Even institutional portals were all liquidity limited and so on. Partners of ours, we had a cast recently, reported people handing in like silverware, literally, and so they had to apply a melt fee for the silverware, and it ends up being significantly less than spot that you get for it. So the physical transport system can get clogged, basically. So if you have tokenized some already, you can exit very close to spot near instantly. Mm-hmm. Whereas if you've got the physical and you're kind of shopping it around, the quotes, they get old, and you're often nowhere near spot. So sometimes liquidity is more than
Kieran, we're having a hard time hearing you right now.
Okay.
Well, Kieran may be having
Always happens. Kieran having some technical difficulties. I gotta say, Jeff, I'm really impressed with that physical piece because it's something that I feel has been missing. You've got people that have some physical themselves, and the fact that they can actually get, like, your other option is you go down to a pawnbroker if you have one, or you have something like that. So I do like that physical piece, which is something we've been thinking about. But of course, you have to have those vaults.
Right. Yeah. I mean, it is exciting, and it's really to me, what. Oh, Kieran's back. Nope, no, we lost him.
What's gone.
Well, we'll let him get sorted out. But what's exciting to me is that, I'm talking about this physical asset that I have that I like. I like the physical asset, but this is a way for me to leverage the value of it, like to put, Kieran's talking about liquidity, to put the value of that asset to work for me without having to give up the asset. Sorry, Kieran, we only lost you for a few seconds.
Am I back, you think?
I think you're back. Yeah.
Okay. I'm closer to the router, so maybe it helps.
It's how it goes. I'm surprised it's you and not me. I expected it to be me today.
Yeah.
Okay. So, I mean, I think that that's, I think that we made the point. That's pretty good there. Oh, I mean, I guess, well, Adam, there's a lot of emphasis on tokenized gold, but we're talking about tokenized silver right now. I mean, do you see other people talking about tokenized silver right now? I mean, it's something that we're very bullish on, but we don't hear a lot about from other people.
No, to be honest, I mean, there were some projects, I believe, now maybe not doing so hot, that we're looking at tokenized silver. The big problem was they didn't have enough liquidity on their secondary markets, and then they started to depeg with the price, etc. And that can always happen, and then that can be a death knell for a project, right? So there were some on a smaller scale, but really, I think gold has been dominant. But to be honest, I don't see why, right? Silver, in my opinion, if you see that price disparity between silver and gold, silver can appreciate at a much higher rate. Of course, non-financial advice. You're talking to the guy here who bought silver at the top in the financial district, the Diamond District in New York, right? So I'm that guy who bought it at 120. So, but I am bullish on it. I think silver is going to be needed, especially if we keep going electric and we're going smart cities and we're going all of the types of infrastructure that's going to require silver. I'm absolutely bullish on it. But again, it's all coming down to, if you tokenize them, you're going to have to make sure that there is sufficient secondary market liquidity if you're going to be trading them on dexes, etc. And that pool management piece is super important.
Yeah, absolutely. Well, I also just want to mention that last week I was talking to somebody who's on 47th Street in the Diamond District in New York, who is buying as much silver as he can, and he doesn't care what the price he's paying for, because he just thinks it's going to keep going up. So he would say you didn't buy at the height of the market. That any buying of silver right now is a good thing.
Yeah, here. I'm trying to get my nieces and nephews into it too. I give them a silver coin for each of their birthdays. I'm trying to tell my brother to stop having kids now, because then I'll run out of silver. But it's something that I do enjoy, and trying to get younger generations into it, because who knows what's going to happen in the future.
Yeah. Actually, one thing I just want to mention about Strato is, we have also just recently launched our newest season of our rewards program, where you can earn points for transactions and for your assets on the platform. And please go to our Twitter or X feed to learn more about that. But Adam, I know I brought up the topic of silver, but do you see any? What do you think about other metals? You see stuff going on with other metals outside of gold and silver right now?
Well, I mean, copper has been one. So there are a couple of projects that have tokenized copper. We've seen, again, the demand. It's the first time I've seen people try to buy and sell copper ingots, even some of the people that I know. So I think certainly, for sure. But same again, the same project I mentioned before kind of started with that gold, silver, platinum as their core. So really the precious metals. But of course, there's base metals and other things that are absolutely needed. So again, I want to see more and more of these assets brought on chain. I want them to be as available as possible. A lot of the times, some RWAs, they do have that kind of step up, whether it's KYC or can only be traded on particular exchanges, etc. I want to see these things as far and wide as possible, because I think particularly for emerging markets, it's absolutely critical that they can get access to some of these financial products. So yeah, short answer, I think copper has been exciting, and obviously the price movement that we've seen, but then also, you know, spans to other commodities too. There's people that are tokenizing hardwood. There's people that are tokenizing, you know, lots of different commodities, because there's only so many, and the demand is going to rise and rise and rise.
Yeah, that's interesting. And you know, along that line, I mean, you know, Kieran, of course, at Strato, you know, the first metal we offered was actually nickel, which didn't work out all that well. But you know, you mentioned that, you know, sort of in this journey in RWA is about, you know, listing a variety of things, you know, collectibles, you know, even carbon offset credits and these types of things. You know, what do you see the future? Like, what do you see the future of, you know, maybe not the RWA marketplace in general, but kind of, you know, on Strato? Like, what other types of things do you see being offered?
I think our attitude is, if it's high quality collateral that we understand, we want to allow people to get purchasing power, liquidity against it, basically. So you got to focus at first to, you know, get over that critical mass issue. So where the system is really usable, where you have the secondary market liquidity Adam's talking about, and so on. But we're not really love precious metals. Should go harder in this direction, and we continue. Well, you know, expecting some large deposits very soon, and so on. But I think it's certainly not the end state, right? I think, as I mentioned, we have a few tokenized stocks eligible already as collateral as well. We're going to see, if you look at the spectrum of tokenized of RWAs, if you will, it is currently much larger than the set of assets available on you know, within all of crypto. All of crypto is a few trillion. There are many more trillions that are out there. So in the long run, it's everything. In the short run, it's what fits well. So fungible tends to be better than non-fungible. Like, doing land is a challenge. You don't know what the land is valued at. Different land is, you know, the land here is different than the land there. There are different titling regimes, you know, so on and so forth. Land is the biggest, but maybe the hardest, right? So it'll be largely things that are fungible, and just where there's a lot of demand today that can be augmented by tokenization. So continue to push hard within metals. You know, treasuries are simple. Everyone is doing treasuries. There's a yield. There's probably some risk reduction from having the off-chain recourse path. There's also there's problems with that too. They can be limited on transferability, but you can get a liquidity benefit from the real asset being very liquid, right? Similarly with the stocks, you know, et cetera. We'll start to see, you know, you're seeing a lot of exotic vaults in crypto today. I a few weeks ago spoke to a project that takes in capital through crypto and lends it to data centers. And if the data centers don't pay, they seize the GPUs and all that sort of thing. You know, high yield model seems to make sense, but it's newer. So we're going to see just a enormous spectrum of opportunities, and the magic of them composing together is really what happens. So you can take a yield-bearing dollar-denominated vehicle and loop it, and you'll see, like, some of the yield coins are sort of strategies in of themselves. Athena, I would say, it's something. It's not quite trying to be a stable coin, right? And so long as it, you know, keeps working, I think that's totally cool. And so, and all these strategies will need more capital as we go forward. So it's going to be a phenomenal, interesting merger, keeping, you know, hopefully some of the good things about TradFi, adding the good things about DeFi, and, you know, ideally dropping some of the bad.
Interesting. Okay, thanks. And Adam, before I flip it over to you, just again want to emphasize that all the things that we're talking about here, there's no financial advice being given here. There's no investment advice. We're just talking. But Adam, just since you're looking at on a daily basis, you're looking at a broader range of what's going on in the RWA world than we are, for example. And just are there other things that are interesting to you? Things that something maybe you've seen that is unique, or like, oh, that's a good idea, or people aren't thinking about that? Like, what do you see going on?
Yeah, I think, as I said, it has been a real evolution. So from stablecoins, if you consider them an RWA, depends how real or not you think the US dollar is. That's probably for a different conversation. But that to me has been a killer use case, as Kieran said. Like, it solved a real problem for many, many people and continues to do so. As we started to see the equities come on chain, people start to get access to their Tesla, Apple, Nvidia. It's always going to start with the blue chip type of stuff. But I think there's going to be a real explosion in things like private credit. I think SME financing, kind of short-term debt instruments. Once we start to see that kind of happening, looping, people seeing that the yield is paid on chain, paid on time, and we start to get that precedent. If you just look at the trade finance space, I believe the number, it's some crazy, it's like $3 trillion. There's a trade finance gap every year where banks just simply won't finance certain things, even if it's a company that has track record, even if it's a company that's been trading for a long time. Maybe it's out of a jurisdiction that they're not comfortable with, or whatever. But I think bringing these kind of short-term debt instruments on chain. And the other thing is, there's a lot of cash trapped in private equity, kind of pre-IPO type companies. They want to tokenize some of the slugs that they have there, offer them out. So I think you're going to see the level of products become a lot more sophisticated, especially as it relates to the institutions. And then for retail, I think it's going to start to become much more far and wide. So as I mentioned, your neobanks, pretty much all of the crypto exchanges, they will have this as a service where you can get access to RWAs. And really, that's what we're trying to do, is map the entire industry, start to make it so that investors can come on, find good projects like Strato and what you guys are doing there. And hopefully that flywheel starts and continues.
Yeah, that's cool. And you touched on another topic near and dear to my heart, which is equity locked in a pre-IPO company. But that's a discussion for a different day. But this. So I suppose last thing I want to talk about is just this concept of TradFi and DeFi. And whether or not one's going to absorb the other, whether or not they're going to coexist. Where our RWAs fit into that. But it also makes me think about Adam, a while ago you mentioned vaults and how vaulting is something we deal with every day. The physical metals held in a vault so that they're safe and secure, but can also be verified. But it's also one of the differences with what we're trying to do at Strato, because right now Paxos and Tether with their tokenized gold products really hold a large share of the market. But it's frustratingly to me, and I'm just speaking for myself, it's almost more of like an institutional kind of play, right? When we're tokenizing somebody's assets, obviously we hope they leave them with us forever and just leverage the value of them, and the assets stay in the vault. But if you want your assets back, you can have them. And we were talking about how with Paxos, if you want to take out your gold, there's a minimum amount of, it's about 400 ounces. Like, if you want to physically remove your tokenized gold, you're going to need to have a couple $1 million. And and Kieran, that's quite a lot different than what goes on at Strato. If you could maybe touch on that quickly.
Yeah. And I get why they do it, right? It's a pain, to open the vault, there's security and all of that. But we're trying to be an accessible offering, right? I think you change the world when you're at least mass market accessible. It's not just a new sort of vehicle. One of the things we're seeing with the institutional revolution, and to your point, Jeff, about the pre-IPO stocks, right? Anthropic got so hot that I myself ended up slightly involved in trying to broker Anthropic secondary market transactions. Like many of my friends asked me, like, how do we get into? It's like, I don't know how we get into Anthropic. And then, but some folks I knew had sellers too on the other side. So, these minimums, the illiquidity created by rules, really locks people out at the end of the day. And sometimes I think our regulations are often well-intentioned, like, credit investor rules and this and that. But what they do is, cement a rich get richer effect. Where, yes, some risk was prevented for people who are not well-to-do, but all the upside accrued to the people who are over the hurdle, right? And so commodities are simple. These are not equities we're talking about. So of course you could take a small quantity, relatively speaking, of gold and silver, drop it off at the vault. And if you choose to do so, go pick it up. You burn the tokens, you get the metals you put in back, right? So that's really the way it's got to be. Also, I think, to my knowledge, we're the only place that you can do the tokenization step and the borrow step in one. So say you even did go tokenized with one of the more institutional players. Sometimes Aave has liquidity available, sometimes not. It's still, they're still relatively inert. Most people are holding the balances. They might transfer, but they're not all that tightly integrated with DeFi today. And this is a big part of what we're trying to solve.
Yeah, thanks. Okay, we just got a couple of minutes left. So Adam, when we talk about this topic of TradFi, DeFi, RWAs, where's it all going to go? I mean, are the big corporations just going to swallow it all up and it just ultimately becomes part of TradFi, or is DeFi going to be something that's going to continue on its own? What do you think is going to happen?
Yeah, I think the genie's out of the bottle with DeFi. It's not going away, right? And I think the ability now to be able to create your own pools, even seeing the explosion of prediction markets as well, is going to get, again, people more used to having their own line, their own market, their own pool. So that's not going away. Having said that, I think it's kind of maybe naive to assume that the institutions will dive headfirst to the DeFi permissionless type thing. Having done some work in consulting for banks, I can tell you firsthand just how bad their infrastructure is. Generally, most of the IT budget for a lot of banks is for keeping the lights on. It's not for innovating and trying different things. So I actually think you'll see a place for both. You're going to have obviously permissionless open DeFi, which will continue, but banks will start to, and institutions will start to implement these types of features in their own controlled way, in their own controlled environment. And you're seeing HSBC with their own platform. You're seeing JP Morgan, of course, with their own, obviously BlackRock. I think you're going to see these kind of walled gardens, which hopefully will be interoperable in some way. But I think it's not necessarily going to be that there's a TradFi and DeFi. It's just Fi. In my opinion, this is just the evolution of finance. This is just what's going to happen. And you made a good point about the regulation and who is it actually in place to protect. I can really speak for Europe because that's where I'm based. A lot of the times, to me, it feels like the regulation is there to protect the incumbent banks and financial institutions. It's not there to protect the widows and orphans that they like to say that it's there to protect. In some ways, yes. Nobody wants to see all of the, nobody wants to see a Wild West where there's, scams happening left and right. But we got that in the early days of the internet. We're still getting that in crypto. So, yeah, I just don't want things to be over-regulated to the point where the big players are the only ones that can come in and make a difference, because the smaller guys, the smaller innovators, the people that are really building, they don't have massive legal budgets to go out there and get, licensed in 15 jurisdictions, etc. So I do think we will get a lot more clarity from the regulatory perspective. I also think that you're going to see a lot of trading of synthetic assets and synthetic RWAs on DEXs, and we're already seeing that in a small way.
Interesting.
The challenge will be when you're going to get, synthetic assets that are backed by a real world asset, and what happens, and again, how do you square some of this with gold? It works, obviously. It's got a global spot price. It's easy to liquidate. Everybody any jeweler on a street corner you can sell your gold to. what does that happen if I have a piece of real estate in the Maldives and now there's a tsunami? And you know, it becomes nuanced, right? So I'm extremely bullish on the space. I think we're going to see more and more innovation all the time. My just worry is that, especially us Europeans, we like to overregulate and just let the innovators innovate is what I hope.
Thanks for that. And I don't think I know anybody who thinks less of regulation than Kieran. So, you know, similar question to you, Kieran, but also just with the flavor of, you know, assuming TradFi and DeFi are coming close together, or becoming the same thing, you know, just maintaining the dream of blockchain, right? You know, just maintaining, you know, that dream of, you know, no middleman and, you know, instantaneous settlement and low fees. And, you know, how does it all play out?
I think crypto has a pretty good shot at the plumbing. I think you're seeing even normal, you know, big non-financial corporations settle cross-border with stable coins, right? Like just normal, like they're not even industry specialized. They're just, this is the cheapest route, the fastest, the cheapest, it's final. You know, we've got operations all over the place. It's better than using the legacy financial system. So I think we will start to see an infrastructure replatform that TradFi plugs into. As far as sort of the front ends, if you will, it's less clear. Like I was using and very frustrated with Coinbase today because I was doing see, there's never these identity checks that they made me do 2 weeks ago on a transfer in. But when you're transferring out, suddenly you got to show your ID 5 more times, and it doesn't work this time. And it, you know, took me an hour, you know, with different IDs and so on. So the weight of the capital is stuck within the legacy, and it's a heavy weight. It's hard to get it to move. It'll probably require like a generational change. So I would say front ends are up for grabs. We have some very popular DeFi front ends like Uniswap and so on. That one does actually real kind of, you know, centralized exchange comparable numbers in terms of active users. Mostly DeFi is plumbing today. And the plumbing works better. So I think we'll see something of a merger. We'll see misapplication of regulation in service of the powers that be, right? Some of it well-intentioned, for sure. But I think something really, you know, I still think, I hold out, and I think something like Uber will happen too. There'll be compelling reasons to sort of route around that the consumer picks. And we kind of just got to thread the needle. As an industry, we have to figure out how to like get hacked less. That's sort of, especially with AI that's coming on. And just, it's already better than TradFi in a whole lot of ways. We got to smooth out some rough edges and make that really visible and easy at the kind of end user point of sale. And some things like, I don't know, credit cards we may never route around, but they're starting to work with DeFi too. In fact, we support the MetaMask DeFi credit card and more to come. So we'll see. I'm optimistic, but it's mixed. You know, they're not going to just roll over the TradFi players.
All right,
nor do we
cool.
need to.
All right, well, Adam, I know you want to go out and get some tapas shortly. But just to wrap up, you know, somebody who's listening who doesn't know a lot about RWAs wants to learn more. What can RWA.io do for them?
Well, we are the hub, so they can come find out about all of the different asset classes. We've got educational content, reports. We've got our own AI, so you can get in and actually start asking about different projects, creating your own strategy for either investment, but also asset issuance. So please come visit us, rwa.io. We're open for business, and I'm glad to say that Strato is also on the platform. I'll be sure to reach out to you, Kieran, to make sure that we can do all we can to get you guys noticed by as many people as possible, because I truly believe that, metals, tokenization, lending and borrowing, this is the future, right? So really happy to be here. Thanks so much for having me. And as you said, I'm going to go get some tapas and a glass of wine now.
Yeah, thanks, Adam. It's been a pleasure talking to you. And Kieran, give you the last word. Just somebody who's listening, not involved in tokenizing anything. How do they get started?
Well, thanks again for Adam for joining. Absolute pleasure. Check us out at strato.nexus or go straight to app.strato.nexus to get started.
Okay. All right. Well, this has been a great conversation. Thank you both.
Thanks, everybody.
Thank you, Jeff.
All right. Bye. And
We got a mic.